This week in real estate, one of the commission lawsuits against NAR got dismissed. The Consumer Federation of America calls for a ban on sellers offering buyer agent commissions and why your listings are not selling. So let's jump right into it. So here's some good news. I made a full video on one of the major lawsuits on this whole buyer agent commission thing against NAR and Keller Williams and the other companies. But one of these got dismissed this week. So an Illinois federal court dismissed a lawsuit seeking class action status filed by Judah Leader, a New Jersey homebuyer, in January 2021 against NAR, Realty Remax, Keller Williams, and Home Services of America on Monday. The proposed class action for the suit was any home buyer who purchased residential real estate listed on a NAR-affiliated MLS after December 1996. So essentially, this person was trying to do the exact same thing as the other home buyers in the other two large cases that I have made videos on my channel last week. And so here's what happened. So in the suit, Leader, the buyer, alleged that the sharing of commissions between listings and buyer brokers is a conspiracy in restraint of the trade in violation of the Sherman Antitrust Act for inflating buyer cost in the form of higher home prices. Well, we're going to talk about that in a second. Two other lawsuits filed against the same defendants, Morrill and Sitzer and Burnett, which recently gained class action status. So these are the other lawsuits that I'm talking about where the judge ruled in the plaintiff's favor, and those are now class action lawsuits. So here's the deal. Judge Andrea Wood, who seems to often rule in the favor of the real estate industry, she was the one that presided in this case as well, found that the lawsuit is barred under the U.S. Supreme Court's Illinois BRIC ruling, which has generally limited federal antitrust claims under the Sherman Act and the Clayton Acts to direct purchasers of the price-fixed product or service, not indirect buyers further down the chain. Wood is also overseeing the Morrill case, which is really, really interesting. So according to Wood, which is the judge, home buyers are indirect purchasers of buyer brokers' services because the services are paid by the commission by the listing broker. I have been saying this the entire time. This is why I just don't understand why the other attorneys in the larger cases haven't brought up this point that was made so clear by Judge Andrea Wood. And so the buyers are not hiring this service directly, and that's why she dismissed the entire case, which is super, super interesting. So Wood dismissed the lawsuit without prejudice, meaning that Leader has the option to refile his complaint. However, Wood stated that she thought it was unlikely that he would be able to plead adequately that he is a direct purchaser of buyer broker services, which he is not. Okay, so that case dismissed. It'll be interesting to see what happens with the other case. Now let's move on to this other big headline that Inman shared today, and I'll link all of these articles in the description. So there's another, more people coming after commissions. So we have the President of the United States coming after commissions. You have these sellers that have filed class action lawsuits. You have other companies filing suit against NAR. And so now, yet again, another trade has association is coming after the real estate commissions. So the Consumer Federation of America calls for a ban on sellers offering buyer agent commissions. So here's what it says. And this is a great report. You guys should all go read this. So Watchdog calls for ban on sellers offering buyer agent commissions. In a new report alleging the majority of commissions are nearly identical in 35 cities, the Consumer Federation of America said offers to buyer agents should be legally prohibited. Home sellers should be legally prohibited from offering buyer agent commissions, the Consumer Federation of America said upon releasing a report finding that the vast majority of commissions are identical or nearly identical in 35 U.S. cities. The Consumer Watchdog report, real estate commissions rates in 35 cities, uniformity and variability, analyzed 17,000 home sales in 35 cities and found that In 24 cities, at least 88% of the listings had a buyer broker commission rate between 2.5% and 3%. In 18 cities, at least 70% of the listings had identical commission rates. Okay, cool. Well, watch this, all right? So this is Stephen Brobeck, and so here's what he said. And he said, this rate uniformity is striking evidence of the lack of price competition in the residential real estate industry. And so he's a CFA senior fellow and the report's author. He also said, furthermore, in an industry rule requiring listing agents to set buyer agent rates, which prevents home buyers from negotiating those rates, he added, referring to the National Association of Realtors policy that requires listing brokers to offer buyer broker commission in order to submit a listing in the multiple listing service. Now, here's what NAR responded with. All right, so this is Mantel Williams. He is the spokesperson. Very, very busy man. I would not want to be him right now. So here's how he comes back and addresses this. So Brobeck told Inman he would like to see other courts decide the seller should be legally prohibited from paying buyer agents because doing so constitute unfair restraint of trade. So listing agents and their clients should have no role in setting the compensation of buyer agents. Watch how this plays out here in a second. He said this via email. So in an emailed statement, NAR spokesperson Mantel Williams told Inman, the market decides commission rates, which is true. Commissions are and have always been, which is also true, negotiable. I don't understand what these people don't understand about that. Consumers have the choice of who they want to pay, how much they want to pay, and how they want to pay them. All of that is true. So that's why I think a lot of these claims are baseless. So there's a couple key things that I want to address here. So Williams also noted that commissions have fallen in recent years. That's fine. Fundamentally changing how real estate is sold and forcing buyers to take on the additional out-of-pocket expense would cause added financial hardship and could freeze out many of the market entirely, particularly first-time and low to middle-income home buyers, he added. That could also force home buyers to forego professional help during what is likely the most complex and consequential transaction they'll ever make in their lifetime. Totally agree. This is what I said in the video on my channel last week. If buyer agent commissions are in fact banned and buyer broker is less common, the buyers are going to be the ones that pay the price dramatically. I don't think there's going to be any real difference for listing agents or sellers necessarily. But here's what the CFA said. This is their position on the argument. So they said there's a general consensus that buyer commissions are added to the home sales price, which then can be financed. Totally inaccurate. I'll talk about that in 1 second. If sellers no longer paid buyer agent commissions, buyers would benefit from lower sales prices. Furthermore, it's highly likely that buyers could finance buyer agent commissions in their mortgages. The mortgage lender and realtors industries have the political clout to remove any regulatory barriers. All right, so let me just talk about this statement right here. If sellers no longer paid buyer agent commissions, buyers would benefit from lower prices. Totally 100% incorrect. This argument suggests that the sellers of a home, or an appraiser for that matter, is basing the sales price on real estate commissions. That is absolutely false. Real estate commissions have zero to do with how much a home is worth. It's nowhere on an appraisal. Nowhere. Has no bearing on residential property value. This guy is totally out in left field right now. In addition to that, if that were true, are you telling me, and let's just take, or anybody for that matter, are you telling me, let's just look at a for sale by owner that potentially pays no sales commission. Are you suggesting, well, this is what this company is suggesting, that all the people that are selling their houses without real estate agents are willing to lower their price by 6%? Yeah, right. Good luck with that. Go up to a seller right now that's got their house listed for $400,000 and say, hey, I noticed you're selling by owner and you don't have any real estate agents that you're paying. would you be open to selling me the house for 6% less since you don't have to pay that? The seller's going to laugh in your face and say, this has nothing to do with real estate commissions. That is completely baseless. It's completely false. And they're missing the major fact that real estate commissions have zero to do with home sales prices and home values. Zero. All right. So let's talk about why your listings are not selling. So if you haven't noticed, which I'm sure most of you have, showings on most of our listings, they just kind of disappeared. So I'm showing you something on screen right here, right now. This is in my market. This is as of last month in April. Normally, or last month in March, we had 14 showings on average per listing. In the month of April, dropped by 50%. I'd be curious to find out how much showings have dropped off in your market. Put it in the comments. I'm curious to see. You can just get this stat from Showing Time right inside your MLS. So what's going on here? Well, total mortgage application, they fell another 6% this past week. And according to the Mortgage Bankers Association, volume on mortgage applications was down 41% from this time 1 year ago. So when we look at that and we look at mortgage interest rates that are continuing to climb, let's look at that a little bit deeper. All right, so with us to discuss what's happening with mortgage rates and the housing market, I have Steve Frost, the president of National Mortgage Funding. So Steve, welcome, my friend. Appreciate you jumping on with us today.
Thanks, man. How are you?
Doing well. So catch us up on what's happening with mortgage rates. It seems to be the headline on every single media outlet that we see.
I know, man. It seems like just not too long ago, we were in here saying home affordability is at an all-time high. Who cares what the price is? Just buy it now, buy it now. You know, you only pay the price once and you get your mortgage and you have it forever, whatever, you know?
Sure.
Rates have definitely made the move. I think we're at the highest levels in probably like 15 years. So, depending on who you do your loan with, the 30-year rate is kind of the rate to have, right? And we're looking at those in like the mid fives. Sometimes in like the credit challenging situations or like investment properties, sometimes we're even seeing 6 to over 6%. So rates are definitely on the move. I don't know that it's necessarily slowing anybody down right now based on the demographic and the way people are qualified to buy houses. But they're on the move for sure.
Yeah. And I mean, to your point, the Mortgage Banker Association, when it comes to refinances, I'm sure you've seen a huge decline in mortgage applications. Is that right?
Yeah. Yep. Absolutely. And like I've preached before, the companies that really focus and push the refinance business, and if that's what you're going to base your mortgage world around, is going to be very cyclical. And we're seeing that. I don't necessarily think it's the sign of a healthy business or a good business or a bad business. It's just a cyclical business if the refinance is going to be your focus.
Yeah, got it. So let me ask you this. I mean, a lot of the real estate agent community are seeing a massive slowdown in the number of showings they're getting on their listings, many of which are attributing that to rising mortgage interest rates. Are you not seeing a decrease in new purchase applications?
It's funny you say it. No. Like, there's what you hear and you read, and then there's what actually is happening. I mean, I have a property and just locally here, that was listed at 260. The offer they took was at like 355. Offer, house listed at 500,000, going for 550, 575 with, 35 offers on them. So I know that, listings are down, right? If you look nationally, listings are down like 67% or something year over year. So there's a lot less inventory. And there's a lot less activity that I think breeds into like, yeah, my showings are way down. It's like, we have sore listings.
Yeah.
And inventory is down,
Yeah, that's a good point. And so I think it just depends on what price bracket people are in that will, and quite frankly, inventory is still extremely low. I think that we're going to see things pick up a little bit. So it'll be interesting to see what happens with the summer market. What do you foresee happening with mortgage interest rates as we move into the summer months?
So I think that, so I said, they've been moving up, right? And that's what everybody's been reading. But actually, since the Fed lowered rates or raised rates last week by that half of a basis point or 50 basis points, we really saw interest rates come down. They went skyrocketing the next day. And then just this week, we're down about a quarter point in rate. And that's because the interest rate market reacts strongly to controlling inflation, right? The interest rate market does not like inflation. That's because that market is built on the purchase of long-term bonds and mortgage-backed securities, right? So a relatively low yield investment. So it's not producing a huge yield. So if everything else is going up, everybody says cash is your worst enemy during a high inflation period. Well, so is a low return safe investment. While it's smart to have your money in a safe place, it's a really low return. So people run away from that when inflation's high. Well, you've seen what's happening with the stock market. The Federal Reserve is starting to raise rates to fight that inflation. So now people are like, okay, stock market's getting bad. Every other news report is recession. Things are bad. They're like, we're going to go park our money back in this long-term stuff now that the Fed is fighting that inflation. And so since there's more people buying bonds and mortgage-backed securities, it decreases the required return they have to provide. So we're starting to see a little bit of relief in the mortgage market. And that may be, that may be fleeting, right? They may be back up another 0.5% next week. But all the big heads, the people that are a lot smarter than me say that, late summer, fall, like toward the end of the year is when we're really going to see rates come back down. And a lot of the home buyers that are buying now are going to be able to refinance some of these loans and save themselves some money. So I've always been a big fan of keeping closing costs low. Now more than ever is a time when you don't want to buy points on a mortgage, like rates. The thing it's funny that every time rates go up, everybody goes, it feels different this time. Like, I think it's all going down. Well, like the thing that's the constant is that it's always feels different, right? It's always the same in that it's always going to be different, but the same thing happens. So, long term, I do see rates coming down. Short term, lock them if you got them. But over time, I think we'll see them come down and you can always refinance.
Well, thank you so much. We always appreciate your insights. So here's what you can do about it, okay? So this is something that I teach all of my coaching clients. It is called an active buyer analysis. Here's how it works. So let's just take $479,000 as an example list price, okay? And what you have to do is go inside your MLS. If you guys want me to make a video on that, let me know in the comments. I'll be happy to do this and show you how this all works, but I can talk you through it here on the screen. What you're gonna do, if you have a property that's listed, it's just not getting showings, it's not selling, we need to do an active buyer analysis on the property. So what you're going to do is you're going to go into the MLS, search over the past 12 months, all right? In the last 12 months, you're going to get a $100,000 range over the past 12 months and get the total number of sales. Just write it down. In this case, as an example, there are 14 sales in the last 12 months between 400 and 500,000. Now, here's where the analysis comes in. What we have to do is we have to break down the sales in each bracket, okay, as a percent. So when we look at this as an example, when we do the research, we find that only 2 sales came in this 475 to 500 bracket, or 14%. In other words, only 14% of the active buyers are purchasing homes in this neighborhood, in this price range over the past 12 months. Now we have to look at the next bracket down, okay? So when we look at the bracket 450 to 475, we find that there's double the amount of buyers. 4 sales in that price bracket, or 28%. And then if we go down one more bracket to 400 to 450, we find that, 57% of all transactions in this neighborhood are in this bracket between 400 and 450. Well, what does that mean? What do we do? Well, first and foremost, we have to share with the seller that there's an 85% statistical likelihood that the home is going to sell for somewhere under $475,000. 85% chance. Okay, so look at the ratios, look at the statistical probability of what's going to happen. We first have to understand this analysis. Second, we have to communicate this to the seller. Thirdly, well, what should this house be priced at in order for it to sell and to get showings? Well, what we want to look at is, I'm going to show you this in just a second. So we want to look at $450,000. That's where this home should be priced at. Why? Well, if you look at these brackets for again on screen, 85% of all the buyer activity, all the buyer transactions are happening between 400 and 475. If we price the property directly, not $449,900, $450,000, Yes, we have an 85% likelihood that the home is going to sell, which is better than what's happening now with no showings. And you appeal into both of these brackets. So when buyers go to search for homes online between 400 and 450, you show up in that bracket. And when they search for homes between 450 and 475, you show up in that bracket. You show up in the top bracket as like the top listing, the sexiest listing. And then in this bracket between 400 and 450, that's the best one. And here you show up as the greatest opportunity or the best deal. So this is what I think you should be doing on every single one of your listings. And then you need to present the information to the seller so they can actually see. You're not just telling them, you can actually show them where the buyers are and how we're missing the mark. And it's not you just asking them to lower the price. So if you guys want, I made a video right here where I break down this entire buyer agent, buyer commission lawsuit. If you want, go ahead and check this out to get all the details.